What's going on, everyone? Welcome back for another episode here on Let It Grow Investing. I'm Jeff. We're going to get it all covered. I've got a little bit of time to tell you a lot of different news, so we're going to kind of just hit the ground running on this one, and we're going to try to see what we can get covered here. Just trying to make sure my headset is correct. All right, so more gains this week, right? We had a toss up here, right? There was Mag 7 stocks that were reporting. A lot of them reported some really great things and still got punished, right? So what is the theme of the week? It seems like, to me, anything that says that they have a shortage of material is just cranking out some wins, right? We are just hearing, hey, yeah, we can't keep up with the demand for chips. And those companies are just doing really, really well. Anyone that mentioned rising costs, CapEx spending going through the roof, they got crushed, right? So we saw that kind of across the board. That was a lot of what I was looking at, right? So I'm going to try to share what Google Gemini kind of came up with a little bit of news here for me because I'm kind of on a time crunch and I didn't know if we were going to get this one out the door. So let's see what Meta's got, or not Meta. We're going to talk Meta, but let's see what Google's got for us. So this past week, right, big tech earnings, Google shares rose 12%. I mean, I told you guys not to chase this one. We should have been in this one a year ago. Is what it is, right? The stock is doing really well. I think we're right around 400, a little bit underneath, but I could pull that up in a second. Doing really well. Everyone that was worried about Google search, well, they have been getting proved wrong again. Google is still dominating. Gemini is doing well. A lot of growth there. 63% growth in Google Cloud. So again, a lot of things going really well for them. A lot of the fear that was out there from Google search getting overtaken by GPT and any other thing with AI in it, it's kind of easing some of those fears. So investors feel a little bit better about tossing some money into the stock, especially with Google Cloud and other, YouTube and other search doing really well for them. Meta, this is what I wanted to talk about, right? Shares dropped 9.8% despite better than expected Q1 results. Let me pull that up. Let's see what we got here. We're going to share this one instead. This would be Meta's revenue. No, this is earnings. Sorry. We've got $59.89 billion of earnings compared to $48.39 billion last year. We had, let's get back over to the other one. I mean, you can see this chart though, real nice staircase, and it looks like we're going to go higher, right? This looks like it's going to be the lowest quarter for the next 2 years. So I don't really understand why we went down, 9%. Other than the fact that we heard about CapEx. Well, we've heard about CapEx before. We heard about the metaverse and the CapEx, and we saw what happened to the stock. And then what happened, right? Everyone got out of it because they thought metaverse was a terrible idea. We saw the amount of CapEx just on the metaverse in the $40 billion range, I want to say. And then they backpedaled, right? We got away from the metaverse, going all in on it. We focused on Facebook and ads and the monetization that they've got over there. And then the stock roared. So we've seen this playbook before. We've seen, one of these quarters back here, it did the same exact thing. But then when your actual earnings is going up and the revenue is going up as well, man, we're going to try to get to just where we want to go with this one, right? So back over to Gemini, significant year-over-year growth in Q1. Released on April 29th. Headline net income surged by 61%. I understand a one-time tax benefit, actually more like 14%. Now, revenue grew 33%. That's not a one-off. We've got company's fastest growth pace since 2021. Constant currency basis revenue rose 29%. That is fantastic. I will take that all day. And we saw the same thing in SoFi. I was listening to Kramer, had Noto, the CEO of SoFi, on. He said very similar things. The golden rule of 40, they came in at 72%. So yeah, they're still doing a lot of things really, really well. They're looking for some of those Trump accounts. This is SoFi. I'm kind of switching gears. I will get right back to Meta. But a lot of things going well there. When they got down to the 15s, I said this thing is too cheap. Anything under $16.50, $17 is a solid entry point, in my humble opinion, to get back into SoFi. So I added some more of that. I also added more Meta, right? So we went from $65, something like that, down to maybe $670, down to like $605. I was adding some shares, right? Because of the fact that the growth, revenue, the year over year earnings, there's a lot of things that are going well for them as well. We've also seen this playbook kind of unfold before, where now they're saying they're going to be spending $135 billion in the next year on CapEx. That is a big fear, but they were already spending like 120 billion and they upped it like 10 or 15 billion. And I'm not as concerned about it as everyone else when the earnings and the growth is there to match it. And where do I want to be in 5 years? I want to be in one of these companies that takes that leadership position, that is the big dog on the porch, that can run away with some of this business, right? So for me, I still think Meta is a great long-term investment, and that's why I bought it on the dip. I thought that dip was overdone, and I wanted to add some more shares there. So yeah, we still want to see ad impressions. We still want to see average price per ad. This climb 12%. We've got a lot of different things going well for us. So yeah, revenue up to 55.9 billion, strong 41% operating margins. That's fantastic. I will take that all day. Anyone that's got a 41% operating margin is doing something right, and that's a competitive edge. I took a capstone business course years ago, and that was actually my senior year of college. But I was asked, what is a competitive advantage? And we were looking at the company Danaher in this individual situation. And, you couldn't just point out to the fact that they had $2 billion or, they had processes or whatever in place. There is a competitive advantage in the fact that you can have a 41% margin over another company. I don't think anyone else that gets right into social media can simply just have that, right? They don't have the advertisers that Facebook has. You have eyes, you have attention. That is the competitive advantage here of Meta versus some of the other smaller startups, right? If you look at, TikTok might not be the greatest example, but if you look at True Social, if you look at any of the other ones, X or anyone else, do they have as much attention? Do they have as many people looking to advertise on them? And the answer, I think, is simply no. I mean, if you're going to advertise as a business, you're looking at Facebook because you can really narrow down into a small area where you want to be, and it has the attention. So for me, that is one of the things that I'm looking at when it comes to Meta as a stock, is the fact that they do have the attention. They are spending the money, but they are growing really fast. So there's a lot of things there that I like as well, right? So now we go back, Microsoft, strong Azure cloud growth, $82.89 billion in revenue. Shares fell 2.4% due to higher than expected AI expenditures and soft guidance, right? So they don't have that backlog of, we can't keep up with the amount of Xboxes, or we can't keep up with the amount of people trying to add Windows products, what's their, I'm trying to think, it's not web services, that's Amazon. I'm drawing a blank, but you understand what I'm saying. And to back up from last week, Iron Mountain was the name that I couldn't get off the tip of my tongue, and they had a really good week as well. Amazon. And now this is one, if I had to pick 10 years, I still think Amazon is so undervalued and it has not got the attention and the pricing power that it deserves, right? So shares rose 1.6% on strong overall results. AWS cloud business continuing to flourish. They're still seeing that. That is still being a driver of business. Them getting more into chips and doing their own thing and partnering with Meta. There's a lot of different things that they're doing. To talk about the amount of business that they have and the amount of customers that are in their pockets. Even if people want to badmouth Bezos, people still have their Prime subscription. I mean, it's just how it goes. You can hate the guy and still use the business, apparently, because everyone seems to be doing that right now. Apple shares increased 3.4%. I think we're around 280, 281 per share. Improved revenue guidance was driven by strong iPhone 17 demand in China. So a lot of different things to digest here. Caterpillar had a really solid week. They had some good movement there. Let's take a look at Cat. I think we're up to like 880 a share, something like that. 889. That was close. So yeah, solid week for them. I think they started the week like low eights. They had some good things to say. There's apparently a lot of building and people are pretty happy with them as well. So if I look at the 5-day here, pretty big gap up here from like 808 to, like I said, 890, call it. We got to 905 on, well, that says the 3rd. That's today, but that does not look completely, oh, sorry guys, I'm not sharing. So yeah, we're at Caterpillar. It says 905. I'm not seeing that, especially seeing that today is the 3rd as I record this. But maybe somewhere in here, pre-market or something on the 1st. Maybe we got up that high, it looks like. So yeah, they're doing really well. We are looking at SoFi trying to bounce back, but it really just, I don't know. I don't know what to think here. We've got this drawdown. And yeah, we hit down into the 15s. I said anything under 17 is really where I wanted to accumulate some shares of SoFi. I had purchased some Meta, purchased some Microsoft. I'm not chasing AMD. I'm not chasing, what was the other one? Google. I'm not chasing them, right? So that is something that I wanted to point out. Let's see just what I purchased this week. I did post this on the Facebook group. I am trying to be as open as I can with you guys as to what's going on out there. I did have my AMD $370 call that is expired. So I just took the premium and pocketed that, reinvested it into some of these shares. Bought some SMR, bought some SoFi, some Palantir. I still think that one has got a good runway, and it's probably cheaper than it should be. Nike, I still like I said last time, Elliott Hill bought another $1 million of Nike shares. So did Tim Cook from Apple. I think that we're going to see some sort of turnaround there. Some people saying the younger audience doesn't like Nike. I don't think that's true. I see it on the soccer field all the time. I see it with the kids that hang out with my sons. They like wearing Nike. Yeah, there's other brands. There's Under Armour or whatever else, Adidas. But it's not like Nike's going out of fashion with those younger generations. So I don't think that is just disappearing. I think that's a little bit made up at this point. I've never seen a 10-year-old in Hoka's or Brooks. I haven't seen it. Or On Holdings, On Shoes, On Clouds. I haven't seen that either. There might be one, but I think the go-to is still a Nike, Adidas, Under Armour. Maybe throw in some Reebok, Champion, Puma. I mean, those are the big three that are out there. So yeah, sold out of some Verizon, sold out of some Apple. I've told you guys for a while, I want to see more than just iPhone and Apple. So I sold some at 270. Yes, it goes to 280, whatever. I thought my money might be better placed into some Microsoft, some Meta, some Nike. So that's what I did. Investing challenge. What do we buy? I think we bought Celsius. I think that was the one that we were looking at. I still think that Celsius is a great play. Less tied to... it's tied to economics. All of it is. But I think that it's still a decent stock to buy at this point. Yeah, the trailing 12 months PE looks scary at 139. We can kind of break that down. But I like the amount of growth that's here. You got around 97% of upside, even on the low end at 21.5% of upside. Okay, I'm going to take this risk. This might be a more speculative play. It's not going to be your tried and true Dow stocks that are going to be paying you 3% dividend. It's not that, right? We know it's not that. I'm not trying to say that it is. If you want that, there's plenty of different industrials, plenty of different consumer staples, and other type of businesses to get into, whether it be banking or whatever. But I wanted a high flyer, and this is that one for me right now. It's not 3M. It's not Procter & Gamble. It's not even Nike, right? Nike's got a 3% dividend yield at the point. But Celsius has a lot going for them, and I think we can start to see some movement higher from here. A couple weeks back, we said what stocks we're going to be buying for the investing challenge. Netflix was number 1. Celsius was number 2. Nike was number 3. SoFi was 4. Microsoft was 5. Netflix had come down, right? We were watching Netflix after, I don't even know if it was their earnings. I forget why they went from like 106 to 95. And I said, yeah, this thing could go back into the 105s in no time. I think I even said like 5 days. And I was wrong. But I still think that Netflix at this price does make sense. It's a decent stock. If we do have a slowdown in the economy, people aren't going out to go to the movies or going out and traveling as much. You don't want to spend, $4.50 on gas or $6 on diesel. You stay at home. You watch some Netflix and chill, apparently. So I still think this is a good place. I think it's a decent entry. Is it a screaming buy? No. Is it a highly speculative buy? No. But it's got a lot of things that tend to do well for it when the economy gets a little bit tighter. And $16 a month is a whole lot cheaper than going out to the movies and spending $100 for a family of 4 with popcorn and drinks or whatever you're going to spend. So I still think that is a pretty sound price point. SoFi came in at number 4 because I didn't like the entry point in the 18s or 19s. If you bought this in the 8s, you still think that this is on sale. You still think it's a decent price. If you bought this thing at 32, you definitely think it's on sale. And you're also kicking yourself for buying it at 30. So do I love it here? I think it's in consolidation here. I think we are trying to figure out where this base is, and then we're trying to figure out where this company goes. We also guided weaker, right? Noto was saying they guided weaker, or they didn't raise their projections because they thought that they were going to get 2 federal rate cuts this year. And now that doesn't look like it's going to happen. So they kept their earnings in line. People reacted to that. They sold it off. And nothing of the business really changed. They're still adding a lot of customers. They're selling a lot of services. They are projecting that they're going to get a lot of the Trump accounts as people now rotate their actual Trump account into another banking institution. A lot of the people that are going to be opening these accounts or being responsible for these accounts are going to be in SoFi's wheelhouse of age range, that a lot of those customers are going to more of an online banking. And SoFi tends to be right in that ballpark or in that wheelhouse for them. So they're thinking they get a lot of that business. Downside's limited. I like it here more than I like it at 19 because I think we're in that range where it makes sense. I think if we get a breakout above 17 or 1750 again, I think this will continue. I just want to see it break out of some of this channel that it's kind of been in over the last, 2 months, give or take. Microsoft. I still really like Microsoft. Do I like it as much as I did when it was at 360? I think we got down to. No, I don't. But you got to remember the start of the year. I'm looking over here at my cheat sheet. We were at 473. So you still have around 34% of upside on Microsoft. Very limited on the downside. Does that seem? That's definitely a tried and true name. I don't think that you've got anything to worry about by tucking some money into Microsoft. And if it's at 415. Or at 395, I think you look back in 3-5 years and you think, man, that was a pretty good buy. I'm pretty happy I bought that Microsoft at 415 rather than, tossing it into GameStop or whatever other gamble play that you might be looking at. So Microsoft, they're not even in the same category. I don't know if anyone's looking at those two thinking, which one should I buy for long term? Even though GameStop is trying to buy eBay, I did see that. We saw some of that. We also saw Spirit Airlines go out of business, and as much as I can't stand Spirit, it's terrible for the 17,000 employees that they had. It's also not great for me when I had a flight booked with them because it was one of the cheapest direct flights that we could get. And I'm like, I got to deal with being on Spirit for 3 hours, but it's direct and the timing was good and I didn't have to pay a premium and I was going to shove everything in a backpack and go for a couple days anyhow. So got to relook at that. But yeah, man, that's brutal. And another reason why I don't like buying airline stocks, the margins are razor thin. I just saw a report this morning that Spirit, if they were in the market, the shares of other airlines dropped around 14%. So you might see some of these other airlines have this big pop come Monday, which makes sense. There's less competition and they can probably charge more. Yes, in the short term, Expedia said, or Southwest said, you can rebook your flights through Southwest for cheaper, but that was only until I think it was May 10th. It might be next weekend. So if you had a flight with them, you could rebook and Southwest would give you a discounted rate. That's not going to be long term, right? These prices are going to go up and that might help some of these airlines. But I still don't want to buy a lot of them, right? United has about 38% of upside. Delta, we've got 17%. And what's Alaska? Is it LK? Yeah, look at me. I got it. Still got it. Alaska Airlines, smaller regional. If I had to bet on one, I'd probably go with an Alaska or what was the first one? United. I'd probably take a look at those, maybe American. I'm still not sold on airlines, so I'm not a big fan of investing in airlines because of the fact that wages are so high. For pilots, for a lot of the people that they have on board, plus the cost of fuel, plus the cost of planes, and everyone wants to travel for cheaper. So a lot of people, even myself included, is going to deal with Spirit because of the fact that it's a little bit cheaper, and I only have to sit on that plane for 3 hours. I guess it is what it is. It almost feels like a race to the bottom. Granted, there's going to be people that are going to pay first class or business class and write it off. That's unfortunately not me all the time. So is what it is there. So Spirit is out. GameStop's looking to buy eBay. I don't know if that's going to happen. Where do we want to go from here? If I'm looking at my sheet, Well, Netflix is still down. SoFi is in a buying range. Celsius makes sense. Microsoft makes sense. Nike makes sense, right? They're all trending down. I think the safest one for you is going to be Microsoft. I think it's a fair entry point. I think it's a comfortable name to pick. We haven't really bought this in a while for the investing challenge. So at 414, I think it's comfortable. At Nike with probably the same amount of upside, 37%, that seems pretty comfortable. You're also getting a decent dividend on Nike. I think Microsoft could probably bounce back quicker. 3.7%, that's even better. You could probably get a quicker rebound off of Microsoft than you're going to get out of Nike. I think everyone needs to see that Nike is going to show them something, right? That is the big question. Can Nike turn around? Is the guidance and what the CEO is saying as good as them backing it with $1 million of stock, right? So I am comfortable with Nike. I am comfortable with that risk. But if you want more of a short-term play, I think Microsoft's probably the better bet. Celsius is a little bit riskier and has more upside. SoFi has less upside, but I think that they're kind of being undervalued. Celsius, I did say that I was going to take a look at their forward PE, not just this trailing 12 months. That's 139. We are going to go Refinitiv. Let's see here. We're going to share this tab because I don't want to leave you guys in the dark again. We are in a buy rating, 5-year return of 75%. We've got 3 broker upgrades. We got a 91% of upside. I guess the forward PE was probably at the top, but I just like to see the numbers down here. So yeah, we're only at a 21 on forward, 70% discount. So if you just see this 134, you're like, oh man, that's ridiculous. But then you zoom out, right? We zoom out, we see it's at 21, and you're like, man, that is a lot of growth for a 21 times PE on forward. The forward PEG ratio is too cheap to ignore. That's it. That's all I need to see. The forward is cheap, and the forward PE is cheap, and the forward PEG is cheap. Price to sales, I mean, it's in line with the S&P, but it is much cheaper than where it has been. So there's a lot here that I do like. I like the growth. I like that we have very limited downside from here. I think we are forming a base. We've got 34% of annual revenue growth. We've got 47% by the end of 27. That's about all the time I have anyhow. So I'm going to go with Celsius. I'm doing my little bit of homework. Hopefully you guys do some of your homework. Hopefully we can get out there, stay invested, and take advantage of any kind of deals that we can find in the market. Because right now with some of these Mag 7 stocks pulling forward, I might write another covered call for, I don't know, 380, 385, maybe call it a month out and see what it does. Maybe even 400. I don't know. I just want to generate some income. And if I sell some AMD shares, it's not the end of the world. But I still think AMD, you got another 3 years. Meta, I think you got another, 5 to 10 years. Amazon, you probably got another 5 to 10 years. I still think that AMD, Micron in the short term, they have the biggest backlog and they probably have the most to gain by AI and all the chips that they're making. And then we're going to have to reassess in 2 years, 3 years. What's next for AMD? Are we making the MI 700 chips? What's the story looking like then? So we're going to have to reassess. But right now, they look like they have enough of backlog to make a lot of investors happy for the foreseeable future. So thank you guys. Please subscribe, like, share, do all the things, click all the buttons, and I will catch you in the next one. Take care.